Bring that ass back like a boom, 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 boom.
Hello everyone, this is Supernova here with Boom Traders Weekly Overview, September 18, week number 37 of 2022, and let's get it going. As usual, session overview, risk vest, tactical trading environment, current markets, and summary. And the risk vest is all red. Sell signal definitely. General market turned negative, so you can see it lost. It was positive. I had it on positive last week, turned to negative. This week we have the up down volume negative, again lost 2 points. New highs, new lows went from neutral to negative, and stock participation from neutral to negative. I don't think that's much of a surprise to anybody. So as far as the tactical trading environment, which is our short-term trading environments concerning breakouts mostly, we are in the hard penny environment, which means that the markets are that the breakouts are not working well, and there's high risk. So maximum caution is advised. Um, as far as trading and setups, I just want to point out a couple of things that do strike out as being important for you in terms of your trading. There are two groups of stocks that are doing better than pretty much everything else. Number one, that's solar energy and phase. First, solar, um, you can just take a look at the whole category. Very strong performance in phase actually on Friday. Actually recorded a very positive day. For solar, same thing. They're close to their 52-week highs in terms of they're looking for breakouts. And the other one is BIOS. Although BIOS has been a little bit inconsistent for the last week. But if you're looking for something to buy in this environment, I strongly urge you to go to those two categories. Now, let's take a look at the current markets. I'll walk you through some charts. I'll try to make this very simple and very brief. Then some notes, and then gonna do the summary. It might look like it's very bearish, and all the signals are pointing towards prices going lower. But right here, what we have on this chart is the S&P 500. As you can see, this is a daily chart of the S&P 500. And I'm going to go through the other indices and some of the internal indicators as well, but I want to show you something that happened on Friday. So we have a mutual understanding that everything that I'm saying in terms of bearishness is within the context of the charts, and we have to be careful. This is 1 year data, daily bars as I mentioned, and I have colored in this pinkish color right here all the times when we gapped either down or we gapped up, and that was the reversal for the intermediate trend. Now obviously long term we are in a bearish trend, we're going down, that's obvious to pretty much everybody. But if you look at those squares right here, you see we have a gap down, we close positive, we reverse. We have a gap up, we close positive, we reverse. Same thing, gap up, close positive, we reverse. There are other instances right here, but I'm just going through the most obvious ones. Right here, gap up, positive close, we reverse. Right here, gap down, positive, we reverse. Gap up, positive, we reverse. There are some instances like right here where we just gap down and gap down again. But if you see right here with the close, same thing. We have a gap down and we reverse. Latest one was right here on this rally last week when we had this buy signal on the S&P 500. We gapped up right here, and that's the 21 or 20 exponential moving average. We gapped up, positive close, we reversed, and now we're going down. And what happens on Fridays, we gap down, but we close positive. And we close positive near that 380 level that I gave you in chat, which coincides with this downward resistance line right here that you can see it on the weekly. And if you look at the weekly, it's just connecting the dots. So it coincides with the weekly, and then we are also sort of forming the right shoulder. If you think about this inverted head and shoulders right here, you have the left shoulder, you have the head right here. That should be the right shoulder at 380. So we came very close to this level, and then we reversed. Now, I'm not saying this is the bottom, but from chart-wise, looking at what the S&P has been giving us all year long as clues, I wouldn't be surprised if I see a gap up on Monday. So with all the bearishness, just keep in mind that the chart is showing something that has been pretty much a very constructive reversal signal for the past year. Now let's get to the other indices and do the QQQ. Pretty much the same thing, and just as happens with the S&P 500, I haven't outlined the same thing, but you can see it right here. You can see it right here. Right here is the same thing. You can see on the latest rally right here, exactly the same thing. And I have this level at 282 right here, undercut the lows, and we went below the 292 level that I had previously. Obviously, Nasdaq's looking weaker than the S&P 500. You can see net highs, net lows for Friday was minus 452. One thing I forgot to mention, you can see here on the S&P 500, I have the put-call ratio for all indices, and we had 1.14, which is extreme bearishness, extreme put buying. New York Stock Exchange net highs, net lows minus 349, and you can see also the IWM, which is actually the rock star because it still hasn't undercut that that trend line right here, which is a short, medium term trend line. So this one's looking pretty much like the best of the indices, although there's a lot of volume coming in here, but it's still at this support line. So if we hold this support line, we might be actually seeing some move to the upside and potentially testing the 50 again. As I said, everything's pointing out to downside, but the charts are suggesting with this gap down that we might see some positive action on Monday. Now, one more thing I want to show you here, and I know this looks very confusing. It's a very busy chart, but I just use it for reference. We have all the oscillators right here. We are approaching oversold conditions on two of them. That's Zweig bread thrust is still not below 40, so we're still good there. And the McClellan oscillator is deeply oversold. But that's not the important part. The important part is this chart right here. And right here we have Nasdaq Composite and S&P 500, with Nasdaq being the white line and the S&P 500 being this purplish line. Throughout the history, almost 95% of the bullish runs have happened when the Nasdaq Composite was doing better than S&P 500. And you can see starting late 2020 throughout the entire 2021, Nasdaq Composite has been underperforming the S&P 500, and that's generally a bad time for the market. This is just for reference. It's not going to give us any signals, but it's just another thing that confirms that the situation is dire. As far as VIX is concerned, you can see we made it to the upper Bollinger Band right here. We went back, and now it seems like we might be going even higher, given the markets are going lower. So that's what I have for indices now. Right now, I'm not going to bore you with more charts. I think that you have to understand the market is in bearish condition, but the charts are suggesting that we might see some positive action on Monday. So let's get into the notes that I have for you, and then we're going to do a brief summary. Now, first things first, we've talked about this for quite some time. Seasonality wise, September is the worst month. Here's the chart for the past 20 years. You can see the decline that's happening throughout late September and early October. And right here I circle for you the percentage returns for September is minus 0.6%. And there are two more months, June and January, that have negative returns, but September is by far the worst month. So we need to be really careful with this. Next thing, there were basically two things that happened this week, and of course the more important one is the CPI numbers that came out hotter than expected. Of course the market reacted to this with this huge drop, and you can see inflation has been raging with energy at least 20%, foods more than 10%, and overall it's sitting right now at 8.3%. And you can see that the 12-month percentage change for the consumer price index adjusted has for 2022 has been like the highest that we've seen for the past 20 years. You can see how much higher is than 2008 and 2005. So we are in big problem. The weekly leading indicator, the WLI, from advisory perspective, suggesting the exact same thing. You know, it runs 1 week behind. This one's actually running 2 weeks now. They haven't updated it, but it still sits at minus 11.7, which is the 5th lowest recorded by them. So it's really a dire situation. And one thing to remember here, you've seen this slide shown a couple of times by Tintin. Depending on the speed of the hikes, the market reacts different way. Now, if we have a fast tightening cycle, basically the hikes are going very fastly upwards. We can see the market's reacting in a negative way. If we have a slow cycle, the market's is better at digesting this, and that may not impede the current run of the market. But right now we are on a fast cycle. Definitely, you can see the current cycle drawn by Ned Davis Research right here. So the market is definitely taking a hit because of the hikes. As far as the next meeting goes, I gave you the link last week to the Fed Watch tool. Right now, the probability of a 75% hike is right here, 82% and 18% of a 100-point hike. And the way this is calculated, you can see the current target rate is 225, 250. So 300, 325, that's 75-point difference between 225 and 300 and 250, 325. So we have 75 points right here. And right here with the 18% probability, we have 100 points. So 225 to 325 and 250 to 350. So 82 for 75 points and 18% for 100 points hike for next meeting. As far as sentiment goes, of course, last week's rally, and you know that the American Association of Individual Investors does that, and it goes 1 week back, as I've said many times. Last week's rally, of course, brought some bullishness right here, 26.1. It will be interesting at the end of this week. I'm guessing things will turn again, and we might actually go lower on the bears. We might actually hit the high. I think that was on the 27th of April, but we'll see what this week's action. CNN turned from neutral to fear, the fear and greed index for CNN. And interestingly, Bitcoin fear and greed index actually jumped 1 point from 26 to 27, but we're still in the fearful mode. In summary, you can see everything is in red. Their sell signal on the risk vest model setups, there are almost none, with few exceptions that we talk about in the presentation. The market is definitely selling right now. Put volume, you see extremely high, volatility high, although it could go higher for sure. And of course, it's all fueled by the recession fears and the Fed hikes. So for now, our recommendation would be cash is king. Be very selective if you're doing any buying. And as far as shorting, it's a bit hard to do right here along the lows with those supports. So just be careful and monitor the chat for any updates. Now, if you like what you see, please subscribe to our YouTube channel, leave some comments, and of course, you're very welcome to join our Discord channel, where you can find a lot of trading ideas and support from experienced traders. So see you soon, and take care, and again, stay safe in those turbulent markets.